Hi everyone. In our MCQ and short answer question paper series, today I brought you answers for the paper number 3. So, Darwani, let's move to the first question. You can see the first question from 2021 advanced level. Here you can see a statement, and what you have to do is you need to mention true or false. The statement is, every business with a profit motive must prepare financial statements based on accounting standards. When it comes to sole props partnerships, these are also profit-oriented businesses, but accounting is not compulsory. Dear children, you know, when it comes to sole props and partnerships, accounting is not compulsory, so no need to follow accounting standards as well. So there is no mandatory requirement of following accounting standards when it comes to sole props and partnerships. So these businesses are also profit-oriented. However, when doing accounting in public limited companies, incorporate companies, kind of incorporate company, accounting is compulsory, and when doing accounting, when doing financial accounting, when preparing financial statements, need to prepare financial statements according to the accounting concepts. So for 2021 advanced level, here you need to mention answer as false. False. Every business with a profit motive must prepare financial statements based on accounting standards. No. So across partnerships, no need to follow accounting standards. Normally, when preparing finance statements, there is no mandatory requirements, right? So answer is false. Right. Okay, now I'm going to discuss answers for the second question, that is also from 2021 advanced level. State whether the following transaction of a coconut oil manufacturing business could lead to an increase, decrease, or no changes in equity balance shown in the accounting equation. So here what you do is you need to present the impact on equity as no changes, increase, or decrease. So we can see a couple of transactions, 4 transactions here. So let's start from the first one. So anyway, I have written the accounting equation. So let's record the impact of transaction according to the accounting equation. Purchase of coconut oil on credit. So when buying coconut oil, my dear children, the stocks increase because they trade coconut oil, stock asset increase. And bought on credit means liability also increases, as trade payable. So what's your answer? You can't see any impact, no impact on equity. You can't see any impact on equity. That's the answer for the first one. B. Dear children, sales of coconut oil with a profit. Sales of coconut oil with a profit. When selling, what happened to the stock asset? Stock asset decrease. Stock decrease. And dear children, when selling on cash, cash asset increase. When selling on credit trade, receivables increase. Anyway, selling with a profit means to whom does the profit belong? Owners. So equity increases because of profit, right? So you don't need to mention anything. You need to present here increases, equity increases because of profit, right? Okay, C. Payment of cash to coconut supplier subject to a discount, subject to a cash discount. When making a payment, cash decrease, and that payment made to suppliers means trade payables, which is a liability, decreases, trade payables decreases. And here the most important thing is settled trade payables, my dear children, with a cash discount. So here when settling, when paying creditors, business received a cash discount means you can see here discount received, it as an income. To whom does income belong? Owners. So we can add, my dear children, income, this discount received under the equity column. Here also equity increases. Here also equity increases. What is the reason? Discounts received. Discount received. So I can explain, my dear children, this by using figures actually. Just assume paid 10,000 to creditors, but the creditors decreased by 12,000. That means by paying 10,000, settled a trade payable of 12,000, right? So that means the other 2,000 received as a discount. To whom does that benefit belong? Owners. So here we need to increase equity by 2,000, no? Because of receiving a discount. Without paying, liability settled liability, no? Okay, dear children. So, however, what you have to do is just mention increase. Just mention increase. Forget all these. Just mention increase. Equity increases. Equity increases. Let's move to the last one, D. Obtaining coconut oil by the owner for personal use. Obtaining coconut oil by the owner. So, here stock asset decreases, and these stocks, my dear children, withdrawn by the owner for personal use means, tell me one word, drawings. So what can you see here? Stock drawings. So because of drawings, equity decreases. Because of drawings, equity decreases. So the answers are, for the first one, when it comes to the first one, there's no impact on equity. Second one, equity increased. Third one, equity increased. And fourth one, my dear children, letter D, actual equity decreases because of drawings, right? So I think this is easy for all of you. Right, okay, Darwin. Let's move to the third question, that is also from 2021 advanced level. A liability is defined as blank to transfer an economic resources as a result of a past event or a transaction. So when you're recognizing, dear children, when recognizing liabilities, you know there are three characteristics. Arose as a result of a past event or a transaction, and when settling, what can you see? You can see an outflow of economic resources, And dear children, when it comes to liabilities, we can see liabilities as present obligations. With regard to liabilities, we can see a present obligation. So these are the three main characteristics of liabilities. However, here, so what is the answer? A liability is defined as present obligation. Liability is defined as present obligation. Liability is defined as present obligation to transfer economic resources as a result of a past event or transaction. So, present obligation is the answer. Right. Now, dear children, after completing the third question, we can move to the fourth one, that is a model question. Right, okay, are you ready? Can we discuss model question number one? Classify following items as assets, expenses, liabilities, equity, and income. So this is very easy for you. Electricity. What's that? An expense account. Accrued electricity. Earlier, electricity, it's an expense. Accrued means part of expense has not paid. You can see as a payable. So payables are liabilities. So accrued electricity, a liability. Prepaid electricity. What do you mean by prepaid? Paid in advance, paid for the next accounting period also. What's that? It is an asset. It is an asset. An asset. Let's move to the next one. Trade receivables. Because of selling goods on credit, you can see receivables. So similar to cash, receivables are also assets. Trade receivables. It is an asset. Dear children, inventory, stocks of the business. What are stocks? An economic resource of the business. So asset. Asset. Motor vehicles, that's also another economic resource of a business. Asset. Okay, moving to the next one, income receivables. As same as, dear children, trade receivables, income receivables also assets. Rent income receivables, commission income receivables, similar to cash, receivables are also assets. Now you can see in the right side, depreciation. Depreciation means an expense. It is an expense. You know, we depreciate non-current assets, dear children. We can depreciate non-current assets throughout the useful life of the non-current asset because of depletion, because of damaging, because of physically wearing. because of due to being outdating. We can depreciate non-current assets according to the prudent concept, right? So depreciation means when assets depreciate, we need to recognize it as an expense. So depreciation means, what do you mean by depreciation? Decrease in values of non-current assets over the useful life of the non-current asset, right? Number 9, accumulated depreciation. Pute, this is an asset account. By using this accumulate depreciation account, we present the decrease in the asset value. Because of depreciating, the asset value should decrease, no? So by using this accumulate depreciation account, we can present the decrease in assets. Because, my dear children, even though we depreciate asset, the cost doesn't change. You can see cost in the relevant asset account. Cost of the motor vehicle account, you can see in the motor vehicle. Cost of the motor vehicle, you can see in the motor vehicle account. Cost of the building, you can see in the building account. So however, because of depreciating these assets, the asset value should decrease, no? So that decrease we need to present by using this accumulated depreciation account. So cost you can see indirectly in the building account, while due to depreciating the decrease in values of the buildings, we need to present through accumulated depreciation account. Once again repeating, the cost of the building you can see in the building account. Then accumulate depreciation, my dear children, the depreciation, so far the total depreciated amount you can see in the accumulated depreciation account, right? So separately, by matching, however, at the end of the period, by matching cost of the asset with the accumulated depreciation, we can find out the carrying value, right? Number 10, impairment loss on trade receivables. So you know trade receivables as an asset, receivable amount from our credit customers. Now what has happened? Here you can see, if you can see, an irrecoverable amount, not a recoverable amount, an irrecoverable amount from the debtors due to, my dear children, being bankrupt, due to a death of a debtor, and due to various other reasons, my dear children. If you can recognize certain amount as irrecoverable amount, definitely it is an expense for you. So impairment loss on trade receivable means an expense. Bank overdraft. So you know this as a special credit facility only for current account holders. So this is a liability. So bank overdraft means payable amount to a bank, no, liability. Investments. Investments of the business. Investments are economic resources of the business. So asset. We can consider investment as an asset. Then, dear children, investment income. So here you can see the return on investment. So that is an income, right? Okay. Let's move to the last one. Bank loan. Bank loan means a liability. It is a payable amount to the relevant bank. It is a liability. So we completed this question also, and now we can move to the next one. Right. Okay, dear children, let's discuss answers for the model question number 2. Complete the gaps in the following table. So here you can see an accounting equation as assets plus expenses equals equity plus income plus liabilities. So first of all, dear children, let me write down here the basic accounting equation. Assets equals to equity plus liabilities. But you know there are 5 accounting components. Out of 5, here you can see only 3. So where did we adjust income and expenses according to this format? We adjusted income and expenses, dear children, under the equity. We treated income as a factor effect to increase equity. We treated expenses, dear children, as a factor effect to decrease equity. So now let's construct, dear children, the expanded accounting equation by using the basic one. So assets equals to equity plus income minus expenses as same as before, plus liabilities. So now here the expenses we can take to the left side. Now assets plus expenses. When changing the side, my dear children, we need to change the sign as well. Assets plus expenses equals equity plus income plus liabilities. So in the question paper, you can see this accounting equation. We call this as expanded accounting equation. So what you have to do is you need to calculate, my dear children, sometimes equity value, income, assets, liabilities. Likewise, you need to find out the missing figure. Okay, so let's start. Let's discuss one by one, dear children. Right, okay, Darwani, let's go for the answers. So according to the first one, we need to find out equity. So this is an equation, right? Total of the left side should tally with total of the right side. So here you can see 450. So when we take the total of all these three also, the total should be 450, but you can see only 270. So 450 minus 270, dear children, it's 180. So value of the equity should be 180. Let's move to the next one. The total of the left side is 600, assets plus expenses. So here also should be 600 then. So only you can see here, you can see only 400 here. So dear children, the value of the income should be 200. 300 plus 200, 500 plus 100, 600. Okay, let's find out the rest also. Right, okay, I'm ready. Now let's move to the third one. Here we need to find out assets. So let's take the total of the right side of this accounting equation. 100 plus 200 plus 50 means it's 350. So to get 350 here, you can see only 20. So value should be 330. Asset value should be 330. Easy, right? Okay, here you can see what we need to find out, liabilities. So take the total of the debit side, take the total of the, left side, my dear children. It's 650. Here you can see only 320. 320. So from 650 deduct 320. So here answer should be 330, isn't it? 330, right? Then, dear children, here you need to find out expenses. Take the total of the right side of the equation. 40 plus 50, 90. 90 plus 150, 240. You can see only 240 here. So, come on, here you can see only 200. So, expenses should be 40. Simple, right? Right. I think now we can move to the last question, dear children, that is from 1990 advanced level. Okay, here we can go for the last question, that is from 1990 advanced level. Indicate the effect of following transactions on assets, liabilities and capital under basic accounting equation. So are you ready? Okay, so let's move to the first one. Darwani, a creditor is paid 8,500 in cash. The creditor is paid. So think from the point of view of the business. Think from our angle, dear children. Creditor is paid means business received. We received cash. A creditor has paid to the business. That means we received money from a customer. So here received cash means cash asset increases. Cash asset, dear children, increases. Within brackets, if you want, you can mention. And we received funds from from whom? From our credit customer. So trade receivables decrease. Trade receivables decrease. So a creditor is paid means you need to think from the point of view of the business. That means we received cash from a customer. So Normally we call them as debtors, but that is from our perspective. Think about from the point of view of the debtor. So to the debtor, it was a payable amount. It was a payable amount to the business. So now think from the point of view of the credit customer, and what can you see there? You can see a payable amount to this business. So that's why here mentioned a creditor paid. That credit customer paid to the business. So here we received cash from our customers, That means trade receivables, the receivable amount of the business decreased and we received it in cash. Right. So always when doing accounting, we think from the point of view of the accounting. Sorry, we think always, my dear children, from the point of view of the business. From the point of view of the business. Right. Second one, moving to the second one. The owner of the business introduced further 35,000 rupees into the business. So here you can see additional capital. Assets should increase, dear children, by 35,000. Owner introduced, so equity should increase. What's the reason? Because of additional capital. Because of additional capital. That's easy for you, no? Moving to the next. Credit purchases. What do you mean by credit purchases? Credit purchase of stocks. So come on here. The inventory asset increased by 38,000. Inventory, right? Inventory means stocks. And you can see it as a credit purchase. So payables also increased by 38,000. We call it as trade payables. Let's move to the fourth one, Darwari. A loan received from the bank, 75,000. We received a loan. So normally we receive loans in the form of cash, right? So cash asset increase, loan you need to recognize as a liability. So liability also increase. What's this time? It's bank loan. Right? So easy for you. Number 5, purchased a machine for 25,000, paying by a check. Purchase a machine for 25,000 via check. So here, purchase machinery. So machinery we need to recognize as assets of the business. So purchase via issuing a check. So here, dear children, bank balance should decrease. So you can mention here cash also, it's okay. Right. Number 6, moving to number 6. A check received from a debtor. While cash balance increase, cash bank, it's okay. And dear children, debtor receivable should decrease. Here what can you see? Business converted receivables into cash. Right? Okay. We can move to the last question. Question number 7. Goods returned to suppliers. What can you see? Purchase returns. And but there's an assumption here. We return, dear children, the goods bought on credit basis. Here we return goods to the suppliers which bought on credit. Then, because of returning, when buying stocks increase, when returning stocks should decrease. Because of sending out, because of returning the purchases, inventory should decrease. Inventory are assets. So inventory assets should decrease, dear children, by 5,000, and these were bought on credit earlier. Then liability should decrease. No need to pay for these return goods. So which liability? Trade payables should decrease. No need to pay, my dear children, after returning the credit purchases. No need to pay that amount. So liabilities decreases. So So now you need to take the totals, and here we finished, my dear children, the paper number 3 as well.